a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
We're going to take a look at emerging market ETFs and whether or not this might be the time to buy with our ETF research director, Nina Mishra. So earlier this year, emerging market stocks sold off.
They were beaten down this year. And in fact, they had a very good rally last year, but this year has been very bad for emerging markets. And there were a number of factors which resulted in this plunge for emerging markets. In general, the global slowdown, particularly slowdown in China, that impacted emerging markets, and Argentina and Turkey are going through major economic crisis. Their currencies plunged heavily, so that impacted the sentiment for emerging markets in general. And rising dollar, US dollar, rising rates in the US also impacted emerging markets, because many foreign investors which were investing in emerging markets for higher interest rates, higher yields, they started withdrawing their money from the emerging markets if rates in US were rising, when rates in US were rising, and fall in emerging market currencies with the rise in US dollar also impacted these currencies. Now, but
the big question, is it time to buy? Especially with what everyone is predicting will be political gridlock. Is that a good time for emerging markets?
Yeah, the gridlock is seen as good for emerging markets because it means that with Democratic control of the House and Republican majority in the Senate, probably the possibility of another round of tax cut or any other form of fiscal stimulus, that possibility has come down substantially. And that means that inflation may not go up, the economy may not overheat as earlier expected, and that means that the Fed may not be very aggressive in raising rates. So that is why the dollar and the rates, they came down. The dollar softened and rates came down a little bit after midterm election results. So those results and the gridlock were seen as being good for emerging markets. And there are other reasons too. Now, because they sold off this year, the broader emerging market ETFs are down about 16% this year. So many investors thought that it may be a good time to buy them because they are trading at such cheap valuations. In fact, the Journal reported yesterday that according to Bank of America Merrill Lynch's latest monthly survey, investors increased their allocation to emerging market stocks to 13% from about 8% in from just about 5% in October, 13% in November. That was a big increase. And oil prices have come down substantially over the past 6 weeks or so. So that has helped emerging market developing countries that are net importers of oil. And that means many countries in Asia. And that is why their currencies, particularly the Indian rupee and Indonesian rupiah, they rebounded strongly in the last couple weeks with fallen oil prices. So lower oil prices also helped many developing countries. And then it was reported by the Reuters last night that China has submitted its written replies on U.S. requests for trade reforms. So that means that there may be resumption in negotiation in trade talks. And that was also seen as good for emerging markets because global trade tensions were negative, and they were one of the reasons why emerging markets had sold off earlier this year.
And that news came out on November 14th.
Yes.
Right. All right, let's take a look at some examples of these emerging market ETFs that you've brought with you. First, there's the Vanguard FTSE Emerging Market ETF.
Yes. So these are the three most popular broad emerging market ETFs that investors could look at. VWO, the product by Vanguard, is the most popular emerging market ETF. It has 54 billion in assets under management. Now it follows a FTSE index which does not treat South Korea as a developing country. FTSE treats South Korea as a developed country.
I see.
So that is why this does not include South Korea in its portfolio.
Right.
It charges 14 basis points, so very reasonable expense ratio. Now we can look at the details and holdings and portfolio for this ETF by going to quote page on Zacks.com. As I mentioned, expense ratio is 14 basis points, a nice dividend yield of 2.7%. Now going to external home page, Vanguard's web page for this ETF, we can see that it's a very diversified ETF with more than 4,500 holdings. Now looking at the holdings, Tencent, Taiwan Semi, Alibaba, Naspers, and China Construction Banks, these are the top holdings, all very well-known names. And since it does not include South Korea, so China has a sizable allocation in the portfolio, little more than 1/3, Taiwan about 15%, and India about 11%.
And iShares has two products.
Yes. So this is a newer and better product by iShares. They earlier had EEM, which we have on the next slide. But in order to compete with Vanguard, they came out with the newer version and cheaper version and better version of EEM, I would say.
All right.
The main difference is that this includes South Korea, because MSCI, it tracks an MSCI index, and MSCI treats South Korea as a developing country. Now, this is also very popular. In fact, it has seen a lot of inflows in the past 4 or 5 years since its launch. 46 billion in assets under management now, and 14 basis points expense ratio, same as VWO. Now looking at details, very nice dividend yield of 2.94%, and we can go to the external home page to look at portfolio and other details. So this has more than 1,800 holdings. Looking at the portfolio, somewhat similar. Tencent is still the top holding. Now Tencent is one of the biggest, companies in the world. It is the biggest Chinese company, biggest developing market company. So it is the top holding in this ETF too. Now since it includes South Korea, so Samsung Electronics is the second largest holding.
Okay.
So if the performance of these two ETFs, VWO and IEMG, differs, it would be due to inclusion of South Korea.
Then the other iShares product also includes South Korea.
Yes, it does. So this has Samsung, and then Taiwan, Alibaba, Naspers. So other holdings are similar. Samsung stands out in the portfolio. Looking at country exposure, so China exposure comes down about 29% because South Korea gets included, about 15% allocation to South Korea, and then Taiwan and India.
And then the iShares MSCI Emerging Markets ETF.
Yes, so this is the older product, older, more expensive. It has a narrower focus. And but indexes are pretty similar. IEMG, EM indexes are pretty similar. IEMG index is a little broader, so it has more holdings, especially smaller and mid-sized companies, and IEMG is much cheaper. This also has 29 billion in assets under management, but it has lost assets to IEMG because investors switched from the older iShares product to the newer and cheaper iShares product. Now, again, we can look at the details. 69 basis points in expense ratio, pretty expensive. So if you're looking at IEMG and EEM, it does not make much sense to buy EEM. you should buy IEMG. But I just wanted to show you what is out there. Dividend yield of 2.5%. And going to the external homepage, you would see very similar holdings, but number of holdings comes down just about 980. Tencent, Samsung Electronics, Taiwan Semi, Alibaba are again the top holdings, and country exposure is pretty similar to IEMG: China, South Korea, Taiwan, and India.
And finally, as we always ask, how do they stack up?
So as I mentioned, these emerging market ETFs, the broader ones that we discussed, they are down about 16% year to date. But if you look at the recent performance, you can see that they have started rebounding of late, particularly after results of the midterm elections came out. So that shows that many investors are now looking at emerging markets as value plays. They have been beaten down too much, and maybe for long-term investors who believe that there should be some international diversification in the portfolio, for them it is time to take a look at emerging markets for their longer-term growth prospects.
All right, do you own either of these?
I do not.
All right. Don't forget, there's always more ETF information on our website, Zacks.com. That's in the ETF section. Use the Funds tab in the top toolbar to get to that section. And also don't forget Nina's podcast on ETFs. That's on the podcast page of our website. With Nina, I'm Terry Ruffalo.